Boom! What's going on, guys? Welcome into your energy news beat here on this gorgeous Tuesday, February 23rd, 2021. As always, I'm your humble correspondent, Michael Denner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, energynewsbeat.com. Stuart Turley, how you doing today, my man?
Man, it's a beautiful day in the neighborhood, and we evolve as humans.
Yes, we do, guys. We have really a packed earnings show today. You can check all of that and a bag of chips out to my left here before we dive in. Continue to subscribe to the world's greatest YouTube channel, Energy Newsbeat, the best place for all of your energy finance. Follow us online, www.energynewsbeat.com. Click that notifications button, the best way to legit just have an IV of news. We're also coming out with an app here soon, so we'll keep you abreast on when you can download that. Will be available on Android and iOS devices. Yeah, let's go ahead and just dive right into it because if you follow the markets at all, I'm sure you're tired of the word frothy, but that's what I'm going to use to describe today's activity. It was a frothy day. Top line indices read as such. SPY was basically flat, down about 0.04 percentage points. Nasdaq trims about 1% off the index, and we'll kind of cover a little bit of what's going on with that because the Dow Jones is basically flat, 0.09 percentage points. So what's going on here? We've got tech falling almost as much as 2% before Jay Powell comes in and saves the day with his Fed meeting notes. We've been covering rising interest rates. That's not going to be good for the tech sector, which is overcome. While today we pretty much saw a flattening of those 10-year interest bonds, the accumulation of being up 28 basis points over the past month is beginning to catch up. What happened was, so that's just been weighing on it. That was weighing on it last night. The futures market, we're seeing it heavily. And then when the market really tanked as it opened this morning, Fed Chairman Powell came out in his prepared statements in front of Congress, and here's the quote: "The economy is a long way from our employment and inflation goals, and it is likely to take some time for further substantial progress to be achieved," aka pump it with more money, baby. There's been massive inflation fears in the recent weeks, as you've heard from Stu, amid really, as I mentioned, these sharp rise in bond yields. Chief Investment Officer over at Bleakley Advisory Group said the Fed is focused on unemployment and seems very willing to absorb higher inflation and excess in financial markets that brings financial instability in hopes of getting there. AKA, they believe they're continuing to get pumped out. I just see across my timeline right now, these $400 checks is now based on your adjusted gross income. Okay, so now I see what they're going to do here. Part of the reason why Nasdaq is down so much as well is due to the fact that as it becomes more and more expensive to borrow money, the companies who have benefited from sort of a retail splurge, but also increasing in the amount of money they can borrow, the amount of non-profit making companies that have these large valuations, it's going to become very interesting to see how they continue to raise money. For anybody, CCIV, we don't cover the SPAC market too much here, but CCIV was a SPAC, announced yesterday that they were going to combine with Lucid Motors. Already on that announcement, they're down over 32 percentage points, and there's a much larger conversation we had is, where did the people in the pipe get sold shares at versus the retail bag holders so there's a lot going on in the markets right now. And I hate to always be doom and gloom when we cover what's going on, but man, it's been a bad week, Stu. There's been a lot of interesting things that have come out on the U.S. equity markets that I think is going to sort of roll over long term. On the bright side, crude oil continues to just chug along. We're currently trading 61.93. We saw $62 earlier in this trading session. That's about 0.3 of a percentage point. Brent trading at a cool 65.26, back into that WTI curve, even up a little more. We're currently about 0.75 of a percentage point on the upside, currently trading about 58.17. As we get warmer, as these weather markets continue to forecast whether we're going to continue to see natural gas take a pounding, it's down another 2 percentage points. They currently trade $2.88, back into the curve for $3.05. XOP was our E&P securities contract leading the way in equities today. Gotta love it. 81.57. That's about 2 percentage points on the upside. OIH, which Oilfield Services, 190.73. That's about quarter of a percentage point on the downside. Let's go ahead and look at some of our biggest equity movers. Starting on the downside, Invesco down 13 percentage point. Cambridge Energy down 12. Tensico Gas down 17. Barnwell Industries down 19. Upside, Marathon Oil, they have a great day. They had earnings drop. They're up 9.8 percentage points. Peabody Energy up for 10 percentage points. Cimarex, they had great earnings today. Lots of free cash flow. We'll cover them. Up 10.2 percentage points. Magnolia, they had earnings today. Great job on the free cash flow from them. They're up 12 percentage points. They're also announcing a dividend, so that's market likes that. Prime Energy Resources, biggest mover on the day. They're up 13.9 percentage points. Stu, what do you got internationally today?
Hey, got only one story since you're demanding all the time today.
I don't demand it. It's what the market requires.
Hey, it's all your fans. Hey, real quick, inflation. If we have $1.9 trillion stimulus check coming in and for COVID, $1.95 of that 1.9 trillion is actually for COVID. The rest of it's going overseas or to other projects.
Yeah, there's a lot of pork. We get it.
Lots of pork. You get rid of that pork, and we would not. If we put it on our grid, we wouldn't have this problem with Texas. Yeah. Okay.
You guys should just go ahead and secede.
I'm in. I'm here.
I know you're, and I'm just kidding. I love Texas, but you want to secede when it's going bad. You don't want the government's help when it goes good, and then all of a sudden your grid goes down, and all of a sudden everybody in Texas wants checks for high energy costs. Welcome to the deregulated market, baby.
I like it, by the way. Okay, here we go. We got Iran, and Iran launches 3 new key pipelines, and I can't even pronounce them, so we'll just leave that alone. But there's 3 of them. One for 300,000 barrels per day, one for 204,000 barrels per day, and another one for 65,000. So that's about 579,000 barrels per day that is not on OPEC or OPEC Plus's quotas, which is coming online, and they think that they've got it. It's going to help their additional 500 tankers that China needs. So that's all I got.
Yeah, I mean, so these Iranian pipelines, I mean, they're pumping as much as they can, but
they got more coming on, Michael.
But the market doesn't care. It continues to chug along. OPEC is not in charge anymore. It's what's going on in all of these other different markets. So unbelievable. You can check all of that stuff out via the world's greatest energy news website, energynewsbeat.com. Guys, a lot of earnings today. Lots of earnings. I count
Go for it, Michael.
2, 3, 4, 5, 6, 7. We have to cover, starting with Cimarex. As I mentioned, they're up big today, currently trading 10.2 percentage points on the upside. The name of the game with them was free cash flow. They had $71 million in free cash flow last year, Stu. $241 million of free cash flow this year. Unbelievable number. Great job out of Cimarex. They also recorded a net. They did have a net loss, which was about $400 million, but the difference was that was due to pretty much all impairment. So just getting some stuff written down. They ended with really manageable debt right here at about $2 billion. So Street really liked what happened at Cimarex. Same for Diamondback Resources, they're up 2.8%. This is, many analysts call this the steady Eddie Permian operator. Great acreage, low cost. They seem to have, they put themselves in a great debt situation. Street liked what they had. Big thing on them is they received a $103 million federal net operating loss carryover minimum tax refund, which is great. They basically get to write off $103 million in taxes last year. They were able to increase their free cash flow from about $65 million last year, $242 million in free cash flow this year. So again, Street likes what they saw, but see, the difference is when the same free cash flow numbers get put up by someone like Cimarex and Fang, the Street reacts much stronger to Cimarex. Why? You don't see those numbers up. Fang gets kind of not lost in the dust. These guys are steady Eddies, Stu. I know you've got experience with them. They're just always around, baby, kicking and turning. Someone's going to acquire them for a nice premium and really, really enjoy it.
Good
in
management,
my opinion.
good numbers.
Yeah. Speaking of another good day, Marathon Oil. Holy smokes. They went ahead and they're up 9.8 percentage points, really off the fact that, where was it? There was something, it was
Don't have a senior moment, Michael.
I am having a senior moment here.
That's for me to do.
Yeah, exactly. Really, no free cash flow on the market. The interesting part is, the interesting part with Marathon Oil is what's happening with the parent company. Because remember, there's the Marathon MPC, Marathon Petroleum. They've just closed, and they will announce the official closing of the Speedway deal. So a lot of that stuff in terms of, Marathon sells a lot of their petroleum to that midway, how some of this stuff gets moved around. Street was a big fan of that. They were able to reduce their debt by about $500 million. So, Street, again, really, really strong on what's going on with Marathon. I'm not as big as a fan of them. I think they've got a little too much debt for my cash flow, or for my liking. But when you have a good quarter, you have a good quarter, and I think a lot of this, again, watch out for companies that have the parent-son relationship. You can do a lot of financial accounting that allows a lot of things, but it's going to be very interesting when we see Marathon Petroleum stuff come out. Magnolia, as I mentioned, was up 12 percentage points of a couple things. One, $27 million in fourth quarter net income attributed to shareholders, which was actually doubled their net income. So they ended with $42 million in net income. So their fourth quarter basically carrying the load for the year. Here's the other thing. They're going to announce a dividend in 2021. That's partly why you're seeing shares spike 12 percentage points. You buying Magnolia for the dividend? I don't know.
Nope, not me.
Laredo Petroleum is our last upsider on the day before we move to our two downsiders. They're up 2.4 percentage points. Not terrible. They generated about $28 million of free cash flow. They successfully transitioned a lot of their operations from Howard County into the company's first well package. They've added about 4,000 acres. They're doing about 85,000 or 87,000 barrels a day, which is about an 8% increase from the full year 2019. But here's the key. They received $234 million from settlements of matured/terminated derivatives. Shout out to the hedgers over at Laredo. Whatever banking team they hired, I hope they left them a nice tip when they sent that. I hope they let him a nice tip when that check was sent over. As I mentioned, they're up 2.4 percentage points today. We got two downsiders. First, we'll just cover Shell Midstream. It's had a decent year. It's $129 million in net income attributable to all the partners in 2020, or in fourth quarter 2020. The problem is they're down to 10, about 0.7 of a percentage point. It wasn't blowout. I mean, I think midstream companies, if anybody, was really thriving in this era. So I think the fact that the street says, we were maybe hoping for a little more, helping you to blow out our expectations even more, but that's really the top line number. And total cash available for distribution was about $161 million, which is about $1 million lower than the quarter before. The last company to announce, Oxy, they were supposed to, along with Diamondback, announced last week. The Houston power outages shut them down. Not a great year for them. They had about $1.3 billion loss, comparable to fourth quarter there's an after-tax loss of about $581 million. And they included a DD&A of about $820 million in some sales, some non-core assets in the Permian Basin. Selling non-core. It just wasn't a great year for them. They're going through a tough transition right now. They're going through a tough transition right now. They at one point the street, it was only down about 0.5 percentage point. Currently trading down about 1 percentage point, but at the time we pulled this was about 0.5. So, when you lose $1 billion and you're only writing off about a quarter of it, that's not good. When they're gonna have to spend about $2 billion to maintain production. Oh, yikes!
What's a few billion between friends, Michael?
Exactly. No, well, to Oxy, it's just to keep them flat. That's what you got to do. Stu, we missed anything today? There's just a lot of earnings today, guys. Big finance show. Appreciate you sticking with us. Anything else on that news desk we need to chat about?
Oh no, we'll have more tomorrow.
And that's right, guys. So with that, we're going to let you get out of here, get back to work, finish up your day. For Stuart Turley, I'm Michael Tam. Thank you for checking us out. Energy News Beat. We'll see you guys tomorrow.